Gomining is on a massive run. The GMT token went up by almost 40% in the last week alone, and the rally doesn't stop. What's behind this rally? Let's have a look at who's buying, who's selling. Let's have a look at fundamentals, and let's dissect what's behind all of this. We are now at almost 39 cents. Now, times for Gomining haven't always been that rosy. The bear market crushed the price quite a bit. We are not yet at all-time high prices, but we are at an all-time high market cap. So that already tells us that there is token inflation, that more and more tokens hit the market, potentially depressing the price. Without that inflation, we'd already be at an all-time high in the price now. But look at this, according to CoinMarketCap, 92% are now circulating, so the inflation won't be that bad going forward. Now here's a chart from a tool that I've developed myself that looks at the token minting events. Here we can nicely see how the amount of token moved from 100,000 in May of 2021 to currently more than 500 million. Now, I'm not the YouTuber that walks you through the website and sells you the marketing jazz and sells you the documentation, all of that stuff. I'm the person that's interested in the data that most people are not looking at. Just as a quick summary, Gomining, of course, focuses on mining, sells NFTs for mining, sells tokens for mining, and it's all focused on Bitcoin mining in particular. Now, here's the first piece of data that most people are not looking at. How many code changes are being done here? How active are the programmers? And unfortunately, there's no good news here. The last update I could find was 3 years ago. That's the GitHub repository posted on the CoinMarketCap website. Now, interestingly enough, the white paper had just been updated recently. The last iteration was from January of this year, and it shows a few details around the tokenomics, around who gets the token, around how the burning happens, etc. But again, we are interested in the data that most people are not looking at, or that most people do not even have access to. Now here's something everybody has access to. This is the careers page. So apparently there's still hiring going on, mainly though on website development and on business development, not so much around the actual mining operations. Here is the LinkedIn. There's 40 associated members. The team is pretty much all over the place, but mainly in Russia and in the US. Now here's something that others cannot know, because this is based on a tool that I've developed myself and that I make available to the premium members. It's thatbitcointrade.com, link is down below. And the tool shows on the left side the number of holders on the Ethereum chain that have at least 1,000 tokens. So at the current price, that's $388, and there was massive adoption up until May of 2022. And since then, we are pretty much going sideways for those retail wallets. In the middle, we've got medium-sized retail, so that's a 10x from the left. So instead of $388, this is $3,800. The graph doesn't look that different. We do see quite some accumulation since beginning of the year. On the right side, we've got the whales, and they seem to be accumulating the most. But let's zoom into this last part. Let's look at the last 30 days. That's over here. The number of whale wallets on Ethereum in the last 30 days, it went up by 30%. Retail, however, barely grew. Just 5% of holder growth. Here are the same numbers on the Binance Smart Chain, because there's also a token available on the Binance Smart Chain, and here we've got pretty much the same. The number of retail investors didn't grow as fast as the number of whales. In other words, this rally here is driven by the heavyweights, by the people that have got massive money in this token, by the people that hold at least $40,000 worth of the token. And so that's why I like this tool so much, right? Time and time again, we see how the whales make the right calls and retail is lacking behind. Because think about this fundamentally, right? In crypto, you've got a luck component and a skill component, but if you play the game often enough, if you make enough trades, then money over time moves from the less skilled to the more skilled. So the people that tend to have more money also tend to make the better calls. Thus, we should follow the whale money. And the whales are accumulating. And the reason we know this is because a lot of trading is happening off-chain, not on the centralized exchanges. So there isn't a lot of centralized exchange manipulation here. So I think it's very likely that this rally is going to continue. Fundamentally, I'm not really a fan in investing into mining, but currently there's a lot of momentum around the GMT token. If you're interested into investing into mining though, I made a separate video on this. It's called The Best Bitcoin Mining Stocks Are, published 2 months ago. Feel free to search for this title and you'll get the video. It's less than 7 minutes. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. Besides premium, where you can get this tool, there's also a free Telegram. Both links are down below.